Hey, this is Andrew McCormick, head of eToro US. You are watching Taking Stock.
After a day of selling here on Wall Street, the risk-on trade alive and well on this Friday, October 17th. A bit of a mixed bag across the major market indexes. That is the tail of the tape we are expecting into the close, with the S&P 500 up about 0.6. The NYSE composite up fractionally. Comparable story for the Dow, but unfortunately for fans of small caps, the Russell 2000 once again having a down day. We did see the 10-year Treasury yield in retreat earlier today, hitting its lowest level since Monday, April 7th. Remember, that's a bit of an infamous day for the markets, the lows of the Liberation Day sell-off earlier this year. We're also seeing the VIX, the so-called volatility index, measures implied volatility against the S&P 500 for the next month. Traders telling us maybe they see some choppy waters coming up, with the VIX spiking to almost 29 on the day, the highest level since April 24th. And all of that, my friends, sets the stage for the show today. And speaking of the show, welcome to it. This is Taking Stock. I'm your host, JD Durkin, just moments away from the ringing of the iconic closing bell right here at the New York Stock Exchange. The one and only Caleb Silver of Investopedia is on deck. He'll join us right after the bell. The amazing team from the National Fallen Fighter Fires Foundation, they will be on the show, and they are here now to do the closing bell. A jam-packed edition of Taking Stock on this Friday you do not want to miss. Now, once, as we always do here on Taking Stock, time now for our favorite tradition here at the New York Stock Exchange. Time now for the closing bell. Hitting the sounding block with some zip today here on Wall Street. That's the way we like to see the markets close in positive territory. The S&P 500 with the tail of the tape up 0.5%. The strongest performing sectors in the S&P 500 today: staples, discretionary, financials. The laggards include energy, utilities, and materials. A strong day for a few key Dow names like Amex right after their earnings, up and to the right, Apple and Visa, while the laggards in the Dow 30 components include Caterpillar, Salesforce, and Goldman Sachs. Let's bring in Caleb Silver. He is the editor-in-chief of Investopedia, also the chief business editor at People Inc. as of late. Very good friend of ours here on the show. My man, welcome back. Great to have you.
Good to be with you.
What are you seeing so far as you look up in these markets? We're kind of off these all-time highs, but I wonder from where you're positioned at Investopedia, what do you see with regards to investor sentiment in these markets?
Cautiously optimistic, and you can't argue with the gains. It's been a very churny, choppy week. Is that just October being October, or is that those cockroaches that we heard Jamie Dimon talking about on the JP Morgan earnings call? Are they worried about things bubbling under the market, given valuations, given the fact that there's a lot of risk on, as you mentioned? Risk is on in a big way. Plenty to worry about, but plenty of enthusiasm still for stocks, and we're not at all-time highs, but we're pretty darn close. At a time where gold is at an all-time high, silver at an all-time high. Very strange market, but investors are hanging in there.
We've been having this renewed debate over the so-called AI bubble. We know the valuation story. We know these forward-looking PE multiples. Pretty expensive for a lot of these big names. What are you seeing in terms of investor appetite for a lot of those names, despite where they're valued?
They're still happy to order them up, and they're their favorite stocks. We survey our readers every 2 months. What are you buying? What are you selling? What do you own? What are you worried about? What's your top 10 stocks in your portfolio? Looks just like the top of the NASDAQ 100. We also ask them, what stocks would you buy and hold today and hold for the next 10 years? Same stocks. Problem is, we've had a change in leadership over the past few months that they may have missed. In some cases, that said, these big stocks have powered their returns for the past 5 to 10 years. They're sticking with them.
Yeah, one of my favorite questions you tend to ask your readers: how would you spend your money right now? What are retail investors telling you to say? If I have a little bit of extra investable cash, here are the key names, the rotations, the sectors, or the ETFs of interest.
Yeah, so we always ask them, what would you do with an extra 10 grand if you could invest it? And it looks like the same stocks that they've been buying: Palantir, Nvidia, Microsoft, Apple, Alphabet. Of course, those are the stocks they own, they have big positions in. Hard to get rid of those positions for a lot of them, but they're missing rallies in some other stocks that have really driven the gains this year in other sectors and outside the United States too. Best performing stock market in the world, still Greece.
When you look at investor sentiment on things like tariffs, inflation, the Fed, we got 2 more FOMC meetings, one a couple weeks here in October, a final one for December. What is that doing in terms of retail investor sentiment, and how much are those things on their horizon right now?
Tariffs are weighing on them probably the most. That's our top concern. They're worried about an AI bubble. They're worried about a bubble in tech stocks for all the right reasons, but I don't think they're too worried about the Fed's next move. Most of them approve of the way the Fed has handled things, despite everything else you hear, and they know interest rates are headed down and to the right. And for investors, they usually think that's associated with good returns in the stock market.
I always love asking you, and I've asked you a version of this question now for years. People go to Investopedia to learn, to become smarter, more informed investors. What are the sorts of things in this media ecosystem they're turning to your platform to learn more about?
Well, they're fascinated with the fact that there's this big convergence going on of probability betting and trading and options betting and sports betting. That's something we're watching pretty closely. They're trying to learn more about that. But they're also realizing that it's getting harder and harder to fund their life, the lifestyle they want. So how can they use investing and how can they use compounding to facilitate that, but also how to protect their money. Now that interest rates are heading lower, they know they're going to get less out of the bank.
Finally, before I let you go, seasonality. September did not exactly hold the way many people had thought it would, but it sets a stage for a really fascinating Q4. What will you be paying attention to in the days and weeks ahead?
Yeah, October again being as choppy as it usually is, historically one of the choppiest months of the year. But at what point will spending really start to seize among consumers? We've been holding up for a while, a lot in the services part of the economy, but if we get a slowdown here because there's concerns about government jobs, concerns about broader layoffs, we're going to see a slowdown in this critical fourth quarter, especially for retailers. I'm watching that closely. It's all about the spend. If we're spending and the economy's growing, I think we'll be okay.
All about the spend, all about the Benjamins, baby. That's
Always.
what they say, right? The great Caleb Silver, editor-in-chief of Investopedia, a very good friend of mine and a good friend of ours here at Taking Stock. My man, have a great weekend. Thanks for kicking us off as always. Josh will take your microphone. Bobby, you and I are going to head this way, and we're going to go for a walk. Let's cue up the poly market participant odds on a number of event contracts we're following for you this week here on the show. How about this one coming up? Well, the folks at General Motors, GM, beat on quarterly earnings. There's actually an event contract space at poly market wagering exactly on this exact question. We get earnings from the auto giant Tuesday morning. Expectations to beat estimates of $231 a share. Now at 87% chance, at least in the hearts and minds of poly market participants. The stock did rally 8% off its last earnings call, and shares of the auto giant up 9% year to date. Speaking of earnings on Tuesday, let's start with a look at Coca-Cola here, Bobby. Shares up 1.2% ahead of their earnings call next week. Today in the session, reaching its highest level seen since September. Max Levchin, he's someone that we've talked a lot about here on the show. He comes from PayPal and a firm, just voted into the board of directors of Coca-Cola, trading above its 50-day moving average in the session today for the first time since August 25th. And since it's National Pasta Day, come on, folks, let's take a look at Darden Restaurants. This is the parent company of Ruth's Chris Steakhouse, Capitol Grill, and the home of the never-ending Pasta Bowl. The folks over at Olive Garden, JP Morgan, despite the price cut from $240 to $230 in a disappointing last quarter, we are seeing shares flat year to date. The average one-year price target on Darden Restaurants still sits at $225, folks. That's upside potential of about 20% relative to these current levels. At this point of the show, we're bringing our next interview. FinTech TV's very own Remy Blair sat down with crypto tax girls Trish Turner to discuss all of the ways that the new crypto tax landscape is impacting investors. Take a look.
Well, joining me here at the New York Stock Exchange today is Trish Turner, Director of Tax and also VP of Public Sector of CTG and Asset Realty. Well, thank you so much for joining me today.
Hi, Romy. Thank you for having me.
Well, Trish, you've spent nearly 2 decades in public service, including the IRS. So tell me why you decided to enter private.
Sure. So after 2 decades, 20 years at the IRS, now is the time to pivot. This is a lot of things are happening in crypto right now. In this last year, we've seen a big shift between regulators coming together at the table, domestic regulators. We saw that with the Genius Act and market structure coming together, and the 1099 coming out this next year is going to be a big move after the 6045 regs were finalized. So with that, public sector is moving to move forward with the crypto taxes. However, the private sector is still kind of lacking as far as needing the education, needing the support. A lot of practitioners are still struggling with being able to prepare crypto taxes. And so right now, it's really a good move because there is such a gap in the compliance and what taxpayers need.
Yeah, and Trish, you and I are here at the New York Stock Exchange, and I remember back in the beginning of 2024 when the first spot Bitcoin ETF launched, and here we are counting down the months until the end of 2025. So it really speaks to some of the progress there. But you mentioned a form that makes many of us pay attention, and that is the 1099. So when it comes to the 1099 DA, what is that exactly, and what does that mean for holders of crypto here?
Sure. So the 1099 DA is going to be coming out in the filing season of 2026. It's going to report all the transactions on centralized exchanges from the 2025 tax year. It'll be proceeds for the first year. The second year will be 2026, and you'll receive those in 27. It'll have proceeds and basis. So what that means is for those that haven't received the information reports before, they may not have realized or recognized all their gains in previous years. So really, biggest advice here is, you have 2025, a couple months left here before those forms come out to kind of get your house in order. If you haven't been reporting all of those, making sure that if you have any amended returns to go back and look at some of those, but also, know that you have your basis that you're going to have to account for this year. The centralized exchanges are not required to put those on the 1099 GAs, and those are going to come out to you. They are transactionally. So for each of those, you'll want to make sure that you have your basis so that you can record your gains, whatever they may be in 2026 for the 25 year.
Yeah, and getting your house in order, especially when it comes to taxes, is easier said than done, right? Whether we're talking about individuals or small businesses or even medium-sized businesses out there. So for individual investors out there who do invest and have sold digital assets, what would you say to them right now?
The biggest thing right now is, again, getting that house in order as they're going through and they're investing in crypto for, this year or even previous years. Are they checking the box on the front of the return? Are they keeping their records? Some of the things that we've seen throughout, even now that I'm, out in the private sector, are individuals not recognizing just those transfers between their wallets are not taxable. So again, ensuring that they're keeping those records so that if they do find themselves in a situation in an audit, that they have that audit trail and they have contemporaneous records, so they have credibility during an examination. But yeah, those are some of the things there. And then 26 we'll have those forms, and 27 and so on.
Well, Trish, as you mentioned, education is key, and you are familiar with stakeholders both in the private and public. So I appreciate your time and perspective. Thank you so much for joining you, and thank you for your
Having me.
Welcome back to the broadcast. This is Taking Stock, still live from the trading floor of the New York Stock Exchange. Time now for the latest headlines you need to know in the worlds of fintech, crypto, and AI. First off, all of the major cryptos down. We did see Bitcoin reach down to the 106 level, ETH at 38.40. Next up at this hour, all this coming after spot Bitcoin ETFs saw more than $530 million in outflows Thursday, the most in a single day since August 1st. As macro headwinds continue to weigh on the minds of investors. Despite these fears, institutional crypto adoption is continuing. This as Florida lawmakers introduce a bill that would let the state and the state pension fund invest up to 10% in Bitcoin and crypto ETFs. Speaking of the broader world of fintech, joining me now for an interview on Taking Stock is John Goldschmidt. John is head of growth at Magenta Labs. Welcome to the show. Welcome to the New York Stock Exchange. It's great to have you here.
Thanks, JD. It's great to be here.
Talk to me about some of the overarching, the trends, the conversations, the narratives surrounding the broader Web3 space these days. John, what are you seeing you think our viewers should pay a little bit more attention to?
Sure. So I think first and foremost, the thing to pay attention to is at Polkadot. Gavin is back. And what that means, Gavin Wood, who is one of the co-founders of Ethereum, is back as the CEO. He's the founder of Polkadot, back as the CEO. So that's big news. I think it's understated the market. But what are things we're looking at? AI is the biggest one. That's everywhere, right? Why is that important with blockchain? The convergence is very important because if you think about technology, we've always been interfacing as humans with these UIs that can only go so far, so that's a limiting factor. So now we have AI, and now everybody's using AI, which is centralized point of failure, and it's also insecure. Blockchain is really good at decentralizing that and securing those assets, securing people's identities. So that's something we focus on a lot at Polkadot and Magenta Labs. Other things, RWAs, I'm sure you saw Larry Fink was here, talked about the tokenization of everything.
Oh yeah.
So that's a big deal, and that's just starting to catch on in TradFi, but that's been a theme for a while for us. That's something we focus on. Stablecoins, another big theme. We're working on that at Polkadot, Magenta Labs. Payments, of course, will be more efficient because of these stablecoin themes. And I think by this time next year, everybody will have used or be holding or know about stablecoins.
Talk to me about the way that the rules of the regulatory landscape, legislation, even in Washington here in 2025, how fundamentally have those efforts from policymakers in Washington, D.C. changed the overall conversation?
Yeah, I mean, I think first of all, a lot of teams are coming back to the U.S. This is 100% true. I know Polkadot, for one, couldn't find regulatory clarity, didn't want to participate here because there just wasn't a good pathway. Now that there's a little more clarity with Genius Act, with some of the bills that are being talked about right now, it's a good time, and that's why I'm here. That's why we're here, having a presence in the U.S. I think that a lot of the themes, a lot of things that people talk about when it comes to strategic reserves in the state and federal level, that's good stuff, but ultimately what it means is that legislators are paying attention. But what's really going to move the needle is when they start actually building, when the government and when institutions start building stuff on chain and using blockchain rails. I think there are really interesting examples. One, for example, is here in New York City, one of the candidates for comptroller has talked about creating a digital twin and putting it on chain for the treasury and the spend that the city is doing, so anybody can go in and verifiably understand where their tax dollars are going. That's a big deal, and I think people will really start to understand the power of blockchain when something like that happens.
I only got 30 seconds or so left. Just give me your top line kind of takeaways as you look at the crypto pullback. We're off those all-time highs for Bitcoin of 125. Seasonality, or what do you see at play?
I think this is a maturing asset. I think, still with Bitcoin, it is an asset. It's, there was this, of course, there's always going to be a trade. There's always going to be a little bit of a narrative, but we care much more about the technology itself, and that's what's ultimately driving this industry, and that's why we're here. And I think we're going to start seeing in the next year, especially at Polkadot, use cases and reasons why consumers will be engaging with blockchain as the rails and as the infrastructure.
John Goldschmidt is the head of growth at Magenta Labs. My man, thank you for being here at the New York Stock Exchange and helping us better make sense of the crypto landscape. It's great to have you today.
Thanks again for having me.
All right, folks, we'll do it again soon. Folks, coming up here on the show, the latest in the worlds of startups, raises, and rounds, plus an interview you simply cannot miss with Victor Stagnaro of the National Fallen Fighter Fighters Foundation, as well as the chief of the FDNY, John Esposito, here from the New York Stock Exchange. More Taking Stock coming up after this. Welcome back to the broadcast. This is Taking Stock live from the iconic trading floor of the New York Stock Exchange. And joining me now, I've been looking forward to this conversation all day. Victor Stagnaro is CEO of the National Fallen Firefighters Foundation and the Chief of the FDNY, John Esposito. Victor and the Chief both join me. Gentlemen, welcome to the New York Stock Exchange. Thank you both so much for being here.
Thank you for allowing us to be here.
Absolutely. Chief, can I start with you here? Give me your sense on not just ringing the closing bell here at the New York Stock Exchange, but really what this is all about to have your community join us on the floor today.
So we're very happy to be here on the New York Stock Exchange, especially with the National Fallen Firefighters Foundation, to honor the 176 members that were not previously included at the National Fallen Firefighters Memorial in Emmitsburg, Maryland, but the Stock Exchange hosting us this afternoon, ringing the bell. It's a great time. Being welcomed on the floor, and the clapping as we come in is great. We know that this neighborhood and this community remembers what happened on 9/11, and we're grateful for it. It's a great afternoon.
Victor, if I say to you 343 and counting, talk to me about what that means to the overall firefighter community here in New York City.
What that means is that firefighters that not only that died on 9/11, but so many more that we're supporting, and their devotion to duty on that day and the days following in the rescue and recovery efforts, and they deserve to be honored just as those 343 were honored at the National Memorial and here in the city.
Yeah, could you both gentlemen talk to me a bit about the ongoing fight? I remember being a Capitol Hill reporter during the Victims Compensation Fund fight with lawmakers, and it really became such a strong bipartisan issue. And you had the John Fields and the John Stewarts of the world making hundreds of trips to Capitol Hill to fight. Why is that still so important to have those conversations and still have that fight on behalf of survivors?
It's important because our people continue to get sick and suffer, right? The tragedy of 9/11 has not and does not end. It continues to this day. We've had, in the last week, we've had another 9/11 illness death, and that number continues, and our people need to be cared for, for what they did. And we talk a lot about never forget, and it's not just never forgetting their memory, it's never forgetting the decisions they made on that day. And I believe that some of our guys knew they were not going home that day and still pushed on and did their job and saved thousands of lives. So we can never forget what they did, and I think we owe it to them to take care of them as we get sick.
Victor, this is not just a random Friday that you're down here. I know this is a really important weekend. Talk to me about what the community is doing specifically tomorrow and what you would know our viewers to know.
Well, tomorrow we'll be honoring the 176 that have not been honored at the National Memorial. Those families will be coming to Staten Island, where they'll receive a flag that's been flown over the United States Capitol and over the National Fallen Firefighters Memorial. And when we flew those flags over the National Memorial for the fallen firefighters, we flew them on September 11th. And those honor guards knew that they wanted to do it on that day. So the symbolism of this day, ringing the bell, and what we're doing tomorrow, it really rings throughout that we're not going to forget their sacrifice and their devotion to the responsibilities and the devotion to duty that they had.
Yeah, Chief Esposito, talk to me a bit more about the community, not just for New York City, how this city continues to rally behind the FDNY, but specifically the community of Lower Manhattan. You said you gentlemen well earned, get the clap down. This is so important to the entire trading floor of the New York Stock Exchange.
Being the chief of the New York City Fire Department, we have some great iconic places throughout the city, and the New York Stock Exchange is one of them. Being welcomed here, and by the people that work here, it's and they remember, right? The people that were here ran out and left that day, right? Because we didn't know what else was happening. These were the people that were walking across the Brooklyn Bridge because subway traffic was shut down and cars couldn't get around, and we do feel a tight bond with this neighborhood and the trading floor down here especially.
Yeah, we love having you guys. It's such a privilege to welcome you all down. I only got a few moments left. How would you like people to continue to show their support for the FDNY?
Well, I think first, check your smoke alarms. Make sure that firefighters don't need to come to your home to fight a fire, so they don't have to risk their lives. But then the other thing is, make sure you're supporting them. Make sure you recognize that across the country and in the city of New York, when the bell rings, they're coming. So the ringing of the bell is so iconic for the fire service. So support your local fire service. Make sure you're there for them when they need you.
Chief, how about for you? Ongoing support. What does it look like?
Just being grateful for what our people do, and out there and helping the community.
That's great to have both of you gentlemen down here at the New York Stock Exchange. On behalf of the entire community, what a pleasure it is to have you guys.
Very nice
Best
to
of
see
luck
you.
with everything this weekend. Thank you both for being here. Folks, don't go anywhere. Much more Taking Stock live from the trading floor of the New York Stock Exchange coming up after this quick break.
Welcome back. I am Scarlett Sieber from Money 2020, and normally I'd be welcoming you to how fintech companies actually make money. But today we're gonna do something a little bit different, okay? So this time we're gonna dig into how exactly the 401k industry makes money. In case you don't know what a 401k is, it's the retirement account a lot of people in the US get through work. You put your money in, your boss might put some money in too, and the idea is one day, way in the future, you'll have enough saved to stop working. Oh, and don't forget, it's also pre-tax dollars, so Uncle Sam stays out of your way if you're trying to stack those Benjis into that 401k. Never thought I said that in a sentence, but here we are, moving on. This is the thing about 401ks. Behind your 401k is a whole industry making money off of your savings. There are gigantic companies that do unbelievable revenue because they have a significant portion of some small portion of that 401k process. The easiest way to think about it is taking a journey back to your childhood. Remember that piggy bank? But instead of sitting on your shelf, that piggy bank lives in the stock market. Well, actually, a very important point, hopefully sits in the stock market, that is. We don't know the stats on 401ks, but around 55% of IRA funds sit in cash, accruing almost no yield. If those numbers are even close in the 401k land, then average people are missing out on billions of dollars, okay? So keep in mind, the amount of money being left on the table is actually really hard to think about. So how do these companies or these sets of companies actually make money? Number one, management fees. If your money sits in a fund, the company that runs the fund takes a tiny cut, like a few cents out of every $100. Sounds small, but when billions of dollars are in those funds, it adds up big. Two, admin fees. The people running the 401k system, record keepers, plan providers, they charge to keep everything legal and organized. Sometimes your company pays this, sometimes it comes out of your balance. Number three, advice fees. If you want help choosing what to invest in, some plans offer advisors or robo-tills, often at an extra fee. Extras. Borrow from your 401k, there might be a loan fee. It is financial services after all, and these are the fees that are hiding around every corner. Now for your cocktail party factoid. In the US, with the 401k, you carry the risk. If the stock market goes down, your balance goes down. In the UK, old school pensions used to work differently. Your company promised you a paycheck for the rest of your life after you retired. They carried the risk, not you. But because that's super expensive for companies, even the UK is moving towards plans that look a lot more like 401ks these days.
And now you sort of kind of know where that money is going every 2 weeks. My PSA to you, make sure you're invested in the market. Leaving that money in cash for decades is one of the biggest drivers of the wealth gap. Mind that gap, folks. Invest, and back over to you.
And that's going to do it for today's edition of Taking Stock. No shortage of earnings palooza set to hit Wall Street next week. Thanks as always for taking the time. 9 a.m. Monday morning, NYSE TV Live and FinTech TV Live. That's going to do it, and we will see you Monday. Yeah, it worked. Come on.